Okay, so this is what we do. The first step that you have to do is write down the years. So we have year 1, then we have year 2, then year 3. Okay, so you start with the accounts receivable. So we have accounts receivable for the first year, 66,000, then followed by the second year, which is 120,000. On the third year, we have 180,000. So the second step is actually to remove those accounts that are considered to be bad debts or to be written off before we calculate our allowance. Okay, so for every year, year 1, 2, and 3, we have these accounts that are supposed to be removed from the accounts receivable. So we have 1,968 for the first year. We have 5,450 on the second year, and we have 11,541 on the third year. So remove this amount first so that you come up with the net book value. So for the first year, 1,968, the figure should be 64,032. Okay. On the second year, remove that bad debt from the 120,000. Okay, so this is 5415. The figure should be 114,585. Then you follow the same procedure on the year 3. So this is 180 less 11,541. Okay, so this is the 168,459. So these amounts are what we call adjusted accounts receivable after you have removed the bad debts, or we call it the accounts that are supposed to be written off. Then after the one, you have to calculate the provision or the allowance. Okay, so there are percentages indicated on the problem of how much should be our allowances. Okay, so this one should be 5%. The second year should be 7%. And the third year should be 6%. So what do we need to do? Just calculate the provision or the allowance for every year. So for the first year, the 5% of this amount is actually 3,201.60 cents. And then the second year, the provision is 7%. So this is 8,020.95. Okay. The third one, 6%. So the allowance, you notice, has declined by 1%. So you just get the value of it multiplied by 6%. So this is 10,107.54. Okay. So let's go to the requirement. We have A, B, and requirement letter C. Okay. So the first requirement is, what is the bad debt accounts for the 3 years? Okay. So letter A, for year 1, the bad debt account or the bad debt expense is the same with the figure that we calculated as the provision, because there's no other years before it. Okay. So this one is 3,201.60. And on the second year, we ask the same question: how much is the amount to be charged to the bad debts accounts in the income statement? So the allowance is this figure minus the existing allowance from the previous year. So therefore, we don't charge the entire 8,020.95, but we only charge how much? 0.95, 3,201.60. So this is our bad debts expense for year number 2. Okay. On the year number 3, okay, this is your provision or allowance, and we already charged 8,020. So you deduct that amount from this one, 0.54 minus 8020.95. Okay, so the bad debt expense on your income statement is 2086.59. Okay, that's the letter A question. Letter B, it says how much is the provision for doubtful debts for the account, doubtful debt accounts for 3 years. So how much is the allowance? This one that you calculated, 5%, 7%, and 6%. So this one will be 3,000 to 1.60. This would be 8,020.95. And then the year 3, we have 10,107.54. Okay? So you notice that the bad debts and the allowance for doubtful accounts are not the same amount of figure. Okay? Because the allowance is the percentage multiplied by the accounts receivable. Okay? So 5, 7, and 6. But the bad debts is deducted if there's already a previous allowance from last year. Just like this one, they are the same, the amount is the same because there's no previous year. Okay? But this one has previous year. So if our allowance this year is only 7%, that is the amount of 8,020.95, and you already charged from last year, you have to deduct so that it will not be overcharged. And you continue the same procedure up to the final year. The final year is the year 3. Okay? The third requirement is letter C. It says, prepare an extract on the balance sheet for the 3 years. So this is what we do. On our balance sheet, you just indicate how much is the balance of the accounts receivable. So our accounts receivable is this first year, 64,032. This is already the adjusted accounts receivable, minus or less the allowance for doubtful accounts. Okay, so how much is your allowance? This one is 3,012.60. Okay, so deduct that from the adjusted accounts receivable. So this one will be 60,830.40. Okay, and then you follow the same procedure for year number 2. So the year number 2 is we have 114,585, and then your allowance is 8,020.95. Okay, so deduct that amount from the adjusted accounts receivable. So this one will be 106,564.05. Okay, and then the next one, the final year, is the 168,459. Okay, deduct also the same allowance. This is the allowance. So 10,107.54. Okay, so 168,459 minus 10,107.54. This one should be 158,351.46. Okay, so that will be the procedure that you have to follow if you have multiple years of calculating your doubtful accounts and the adjusted balance of your accounts receivable. So what do you call this figure in the bottom line? We call it the net book value of the accounts receivable. So which means to say, at the end of the year, this is what you can see in your balance sheet, the adjusted amount of the accounts receivable. Okay? Copy, and the question number 4 and number 5 is your task. Okay?